In today's video, we're going to look at VEU, global stocks x the United States. The rationale for looking at this is fairly simple. If global stock markets have trouble and are in downtrends, it's going to be very difficult for the United States and the S&P 500, the Nasdaq, and the Dow to buck that trend forever. Global indices are at a point where they've got to make a stand here soon. We'll look at some retracement levels, we'll look at trends, we'll look at support, and we'll also look at some DeMark charts on a daily, weekly, and monthly basis. This is the Vanguard All World Index with the United States taken out. So think of it as global stocks minus the United States, symbol VEU. These lines here are Fibonacci retracement levels. Here's the peak in May of 2011. Here's the bottom in October of 2011. If this is an ongoing downtrend, the way Fibonacci retracement levels work is it wouldn't be unusual to retrace 38.2% of this whole decline. It wouldn't be unusual to retrace 50% of this whole decline. And it wouldn't be unusual to have a counter-trend rally that retraces 61.8% of this whole decline. And as you can see, the rally off of the October low retraced almost exactly 61.8% of this entire decline. The concern there would be this 61.8% implies that this downtrend might still be in place, and this was strictly just a typical counter-trend rally. And as we'll see going forward, there's some reason to believe it might be at a point where it could reverse. But all things being equal, this is not bullish for VEU and would add to our concerns from a prove-it-to-me market. The market's got to prove something to us here and reverse the current downtrends in a more convincing manner than we saw, let's say, on Monday and Tuesday of this week. This is the same chart. We're just now looking at the rally off the October low. So think of this as a move from here to here. And these are retracement levels of this whole move. This also is a little concerning in that if this was an ongoing uptrend, typically you would see us retrace 38.2% of this move, which is here, or retrace half of it at 50%, or if this is a typical counter-trend rally, it would retrace 61.8% of this entire move from the October low to the spring highs. And as you can see, all three of these retracement levels appear to have been taken out, which means this uptrend may no longer be intact, and this isn't really a counter-trend rally relative to this uptrend. It could possibly be a resumption of this longer-term downtrend, with this just being a counter-trend rally. We're basically looking at the same chart now. We've just added some moving averages. This pink trend line, which attaches this low, and the low that we made on Friday of last week, does give some hope for a fairly significant bottom or bounce here. If you bought here, that tended to be a good move. If you bought here, that was a good move. However, it's still a prove-it-to-me market. The fact that we hit the trend line doesn't prove too much yet. We have to stay above it and start moving in the other direction, and we have to see some indicators turn up and some volume and some convincing reasons to buy here. The point of this trend line is keep an open mind. This could be a meaningful low, but right now it just doesn't look that way. Here is the peak last year, and here's where the debt downgrades of the U.S. come in. Notice here, the green line is the 100-day moving average. Notice when it flattened out right here, and then it turned over. Right in this area, things got ugly for global stock markets. You can also hear the 200-day moving average rolled over, which is always a bad sign. So these arrows show we've got a rollover of the 100-day, a rollover of the 200-day. Now, the negative thing for the S&P 500 and for all risk assets is, despite this rally off of the October low, you can see that this 200-day moving average is still clearly in a downtrend and has a negative slope. And somewhat by definition, that's a bear market. It appears that that this downtrend is still in place, but we'll have to see how these things play out. The shorter term moving averages, the blue line is the 20-day, the red line is the 50-day, and then the 100 and 200 we just talked about. Here you can see when things started to unravel, the slopes of these lines, moving averages, start to roll over. Here, when things started to improve, notice the green line, the 100-day flattened out, and then it ticked up, and that was the beginning of an uptrend. And as you can see, the shorter-term moving averages, the slopes turned up here in a bullish manner, and they rolled over here. The point is, these moving averages do not look good right now. They're all rolling over, they're all pointing down, and if this 100-day rolls over, that's negative as well. This market could find its footing here, so we will keep an open mind. Now we're looking at a weekly chart of VEU. 3 quick points. 22-week moving average, very similar to what we looked at before. Slope rolls over here, that's bearish for price. Slope bottoms out here, turns up, bullish for price. Notice it's flat and indecisive here, so if it turns up, obviously that would be bullish. If it turns down, that would be bearish. As far as momentum goes, obviously it's negative right now. Here's where you had, somewhere in this area, it's hard to see, a bearish MACD cross. A bearish cross is when the black line goes below the red line. So this area here looks similar to this area up here. Price did not do well after that. ADX measures the strength of a trend. The way you use it, the black line, if it's rising, shows a strengthening trend, and that can be a bearish or bullish trend. When the red line is above the green line and the black line is rising, it tells you that a bearish trend is picking up the pace. When the green line is above the red line, that's bullish, and we never really moved into a strong uptrend here because the black line never really turned up. You'll notice where we are now, we've got red above green, similar to here, 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 and it appears that this downtrend is trying to pick up steam as the black line is moving up from relatively low levels. Red above green, black trying to turn up. Red above green, black trying to turn up. Price did not do well. So in the prove it to me world, this chart has to prove some things to us. We'd also like to see this MACD histogram start to tick up in a bullish manner. It's still ticking down in a bearish manner. We'd like to see the red line go above the green line if you're looking at the market from a bullish perspective. Now we're looking at VEU on a daily DeMark chart. DeMark charts come from Market Studies, LLC. This is somewhat of a mixed bag, but tends to lean bearish. This is a violation of a support level. The fact that this line got a little bit darker than, let's say, these lines here says that you've got a trend change. So that line worked out very well. Once that turned dark, we came down rapidly. So that's bearish. On the bullish end of the spectrum, we do have a 9 up, which is a buy setup. As you can see here, sometimes rallies follow 9 ups and sometimes declines follow 9 downs. The other possible bullish combination is a 9 and a 13. We're at a 9-9 here, which says that we could see another week or so of weakness before we would get to a 13. In terms of DeMark propulsion and line targets, you've got 35.74 as a TD line potential target, and then you've got propulsion targets down here at 37.95. These are both areas where you could look for a reversal in price. Let's move now to the weekly chart for VEU. Weekly, you can see here that we have a bearish violation of this TDST low, and here is the one that we're concerned about now. This level's at 39.56. On Tuesday, we closed at 39.35. So that's 2 consecutive trading. Well, we closed last week below it. That's negative. Now we're below it. The longer we stay below it, especially into week's end, the line could turn solid like this, which tends to be followed by weakness. This is a weekly chart, so this is a significant period of time. If we can retake 39.56, all things being equal, that's bullish. Propulsion here also shows 37.95 as a possibility, and 35.51. Going to a monthly. Here, 41.05 would be the number that we would watch, the TDSD number. We'd prefer from a bullish perspective to see this market retake 41.05. The fact that we're down below it now leans bearish. The material in this video has no regard to the specific investment objectives, financial situation, or particular needs of any viewer. This video is presented solely for informational purposes and is not to be construed as a solicitation or offer to buy or sell any security or any related financial instruments, nor should any of the content be taken as investment advice. Any opinions expressed in this video are subject to change without notice, and Shavaco Capital Management, LLC, or CCM, is not under any obligation to update or keep current the information contained herein. CCM and its respective officers and associates or clients may have an interest in the securities or derivatives of any entities referred to in this material. CCM accepts no liability whatsoever for any loss or damage of any kind arising out of the use of all or any part of this material. We recommend that you consult with a licensed and qualified professional before making any investment decision.